The housing market has been on one crazy roller coaster these past 2 years. The fear of recession looming over our heads and interest rates being hiked at the fastest pace in modern history. Now, as real estate investors, this has been very nerve-wracking. As a regular Joe citizen homeowner, it's been fear-inducing. But that being said, the housing market has been pretty quiet, pretty resilient. Sure, there's been a pullback in prices, but nowhere near what economists were predicting was going to happen to the housing market. Normally, in a hike cycle this aggressive and this fast, there should have been major damage to the housing market, like 30, 40, 50% price drops. But why didn't the housing market crash? And what's likely going to happen over the next year or two? That's what this video is all about. Let's get into it. So the prediction of many economists and myself being a real estate investor in the market for the past 12 years, buying over 150 properties and having still an active flip business all across America, a lot of people are kind of forecasting that the next 1 to 2 years are going to be flat to modest growth, 2%, 3% appreciation, which by the way is completely a normal market. Now, in comparison to the pandemic years where everything was golden, prices were going up like crazy, you could buy any house, just wait 2 weeks and it'd be worth $100,000 more. Compared to that, it feels like we're crashing. It feels like we're doomed. But if you look at the data, how many days on market, how much inventory is on the market, we are right now at a neutral to slight buyer's market and in some areas, slight seller's market. Basically, we're at normal numbers. Normal for the 1990s, 1980s, early 2000s. We're back to normal. And again, I gotta say it again because compared to the past 2 years, yeah, it feels like we're crashing. It feels like prices are down so much, like houses aren't growing. We're just back to normal. 2 to 3% appreciation every single year is what's being expected for the next year, year and a half. Until those rates start coming down, which we'll talk about later in this video. Number two, the next thing is that supply is really low and it's expected to stay low for years to come. Now, this has been pretty much solely responsible for propping up the housing market and why real estate prices haven't crashed 30%, 40% like economists were expecting, only about 15% in the majority of areas across the US. Sure, you're Manhattan, New York, San Francisco, downtown Chicago, sure, prices may be down 20, 25% in those major cities, but the majority of America, suburban America, the Midwest of America, only down about 10 to 15%. Nothing like economists predicted. That's because there's no inventory. And the reason is during the pandemic years, builders went nuts. When interest rates were low, they started all of their projects, put shovels in the ground, and all of that supply has just been on the market, like a year ago or right now, but nothing new is coming up. Builders haven't been building over the past 2 years specifically, so most of that new build inventory has been gobbled up during the pandemic years. And now, with nobody selling, builders aren't building, supply is low, but demand is still insane. Millennial buyers still want to buy, but there's nothing to buy. See, the key to 2008 and why it happened is because there was so much for sale. Houses were for sale everywhere. You could pick and choose. You could offer on this house. If they didn't take your offer, no problem. Go literally next door, offer on that house, offer on that house. Neighborhoods were filled with listings. That's not happening right now. Nobody's moving because interest rates are so high. And especially in America, sellers have locked in 30-year mortgages. So why would they sell? They're locked in at 2%, at 3% for 30 years. They're not selling right now and getting a 7% mortgage somewhere else. To keep up with the Joneses trend is on hold. Sellers aren't selling, builders aren't building, nothing's on the market. Millennials still want to buy. It's propping up the housing market. Way better than everybody thought. But with that being said, inventory is soon going to start to hit. When those interest rates come down, sellers will start selling again, and there'll probably be a major influx of sellers because typically keep up with the Joneses like to sell every 3, 4, 5 years, move up, get something else. That hasn't happened for the past 5 years. So it's going to be all this pent up demand of I've been crammed in this little tiny house. The house is fine, dude. Okay. Let's be a little more frugal. The house is fine. But there's going to be all this demand of I've been cooped up in this damn house. As soon as the interest rates come down to 5%, 4.5%, we're off to the races. So there's going to be this massive amount likely of sellers. However, there's also going to be a massive amount of buyers coming on the market to scoop up that inventory. So it's not, we don't really predict this buyer's market coming up. That's for sure. Number 3, millennials and Gen Z now are going to be out in the market come 2025, 2026, when those rates are more at realistic, historic, even levels, 3.5%, 4.5% mortgages. Once those rates get around there in America, millennials and Gen Zs are going to be out. And Gen Zs by that point, are going to be around 20, 27, 28, 29 years old. Millennials at that point, on average, will be 36, 37, 38. So a massive set of generation. Remember, the millennial generation specifically is fucking huge. It's the only way I can put it. All the boomer babies. It is a massive, massive generation, all wanting to buy homes at the same time. That generation was voodooed into buying. You got to buy a house, never rent. So it's in our heads. We got to buy. Gen Z, not so much. They're getting used to the idea of home ownership is probably not for me. I should probably just rent. But there's still a lot of Gen Zs who are going to want to buy. So you're going to have these two giant generations all wanting to buy at the exact same time. That is what's coming in 2025 and 2026. So the buyers are going to be out in huge numbers. Number 4, obviously, rates by 2026, even 2025, are going to be much lower than they are right now. That is for sure. The economy can't hold it up. The job numbers are coming out. Unemployment numbers are coming out. Consumer spending numbers. The more reports that just keep coming out in the past month for making this video is showing, the U.S. isn't doing as good as it's been made to believe in the first quarter of 2024. We're starting to see the cracks. We're starting to see the beginning of consumers pulling back from that pandemic spending, even all the money from sellers that already own homes and they're locked in mortgages. They've been really propelling the GDP growth and the market in America. Even they're running out of money now. So with inflation, high food prices, high gas prices, it's starting to get to everybody. People are starting to get second jobs, which economists are finally starting to talk about these amazing job numbers in the U.S. Look at all these jobs. Yeah, look at the data. Who's making the jobs? What are these jobs? Majority are part-time jobs or public sector jobs, government jobs. Those jobs mean nothing. There's no producing real for the economy. They're just nothing jobs, really. And part-time jobs, reason why there's so many is people are getting second jobs. They have a full-time job and they need a part-time job at night just to afford rent, mortgage payments, food, gas, car payments. Everything's gone up. They need a second job to afford that. And finally, economists, and it looks like the Fed is starting to go, okay, we can see what's going on. We can see the trend. Bottom line, rate cuts are coming in 2024, okay? And they're going to be throughout 2025. And by 2026, even the Fed, is forecasting rates to be around that 4% mark. That's all it's going to take, baby, for the housing market to pick up and lift off again for the next cycle. And also from a lot of economists, they're predicting the major fear factors for 2025 and especially 2026 is going to be deflation. Yeah, not inflation, deflation. From the Fed and the governments around the world going too hard, too fast, raising rates way too much, way too fast. There's going to be repercussions from that. You think it's just going to be, we're just going to hold rates where they are for a bit and then we're going to slowly bring the rates down, hunky-dory. Everybody's going to figure it out. Businesses will be fine. Commercial real estate will be fine. The big banks, everyone's just going to figure it out. That's never happened in modern history, ever. Listen, and I've showed it on my channel so many times, every time, the Fed has raised rates in a meaningful, quick fashion, not even close as fast as what just happened, but still, in a quick fashion, every time they come down just as fast as they went up because they broke something. Either job losses were crazy, businesses were pulling back from investing, i.e. job losses, the banking industry got hit, the real estate sector got hit, something breaks, and the Fed has to quickly U-turn and lower rates almost just as fast as they came up. Every time. Maybe this time will be different. I don't know. We'll see. But judging by the data, that's likely not going to happen. They're probably going to do the same thing again. They're going to lower rates very quickly. They might start off slow and then something's going to break and then they're going to go shit. And then they got to lower rates way more to stimulate the economy. That is the next cycle for the real estate industry. Basically, if you thought the real estate market was going to crash and be this giant Armageddon, dude, you missed it. You missed it. The real estate correction already happened. The past 2 years have been the correction. It's up from here. In the majority of markets across America, it's up from here. You're at the bottom right now. As soon as those rates start cutting in September, October, November, somewhere around there, That's the beginning of the next cycle. You think real estate's going to go down? With all this pent-up demand from millennial and Gen Zs, no supply on the market, none. Builders aren't building. Interest rates are too high. They're waiting. You think real estate's going to go down? Maybe. Almost impossible. Now you're probably going to say, Matt, job losses. What about the job? Those are coming. They are coming. But who's going to most likely lose their job? Who's going to lose a job? It's going to be low-income people, part-time people. Those people weren't in the housing market anyway. The middle class, upper middle class, if they do lose their job, they're going to find another job. I talk about this all the time. The people who are going to lose their job were never in the housing market anyway. They're not going to affect stats whatsoever. Now, my prediction for the next 20 years in real estate, just for fun, what do I expect for the next 20? You can't predict the next 20 years. What do I expect? Depopulation is going to be our issue. We're probably going to have too much houses. Millennials aren't having nearly as many babies as the boomers. Boomers are going to be dying off by that point, sadly. You know, Gen Zs aren't having kids either. Gen Alpha probably not going to have as many kids. And Elon Musk talks about this all the time. We're probably going to have depopulation issues. They're already talking about it now. So what does that mean? Too many houses, most likely, going to be in America. Prices are going to come down. I predict a massive real estate 2008 crash. That's just for fun. That's what I predict for the next 20 years. Anyway, what do you guys think? Let me know in the comments below. See you in the next video.